Hey everyone, welcome back to Corporate Decoder, where we take financial documents and turn them into plain English. And today we're diving into First Eagle Private Credit Fund's latest report, and it looks like they've been busy behind the scenes with some unregistered sales. But before we get too deep, if you're all about cutting through the corporate jargon and getting to the real story in these filings, make sure you hit that subscribe button. And hey, we've got a fantastic Discord community brewing, linked in the description below, where we break down these documents together. Come join the conversation. Alright, so what is the big news here? First Eagle Private Credit Fund, or the fund as they call it, has been selling some shares that didn't go through the usual registration process with the Securities and Exchange Commission. This usually happens when a company sells shares to a select group, often big investors, or through a special vehicle designed for holding the company's stock. In this case, they sold Class I common shares to a feeder vehicle that is mainly there to hold the fund's common shares. They're saying this is all legit, falling under exemptions like Section 4, R2 of the Securities Act of 1933 and Regulation S. Looking at the specifics, back on the 1st of December of 2025, the fund sold 4,337 of these Class I common shares. The final number of shares was confirmed on the 19th of December 2025. The price, they got $105,000 for these shares. Now, this isn't all of it, this is just part of their private offering. Shifting gears a bit, let's talk about what the fund is actually paying out to its shareholders. This is the juicy stuff, right? On the 23rd of December 2025, they declared regular distributions for each class of their common shares. For the Class I common shares, they declared a gross distribution of $0.21 per S-share. And good news for these shareholders, the shareholder servicing and distribution fee was $0. So the net distribution for Class I shareholders is also $0.21 per S-share. Nice and clean. Now for the Class D common shares, the gross distribution was also $0.21 per S-share. However, there was a small shareholder servicing and your distribution fee, amounting to $0.005 per S-share. This brings the net distribution for Class D shareholders down slightly to $0.205. Per share, small difference, but it adds up. These distributions are being paid out to shareholders who are on record as of the close of business on the 31st of December 2025, and the actual payment date is the 29th of January 2026. So if you are holding on to these shares, expect a little bit of cash or more shares in your account towards the end of January. And for those in their distribution reinvestment plan, these distributions will be automatically reinvested. Next up, let's look at something called net asset value per share, or NAV. This is basically the value of each share based on the underlying assets of the fund. For both Class I and Class D common shares, the NAV as of the 30th of November 2025 was $24.21 per S-share. On that same date, the total value of the fund, its aggregate NAV, was sitting at $301.4 million. Pretty substantial. The fair value of its investment portfolio was even higher, around $605.1 million. This indicates that the fund has a good chunk of assets it's managing. Now here is a measure that often makes investors pay attention, the debt to equity ratio. For this fund, as of the 30th of November 2025, it was 1.18 times. This means for every dollar of equity the fund has, it has about $1.18 in debt. It's not alarmingly high, but it is something to keep an eye on, especially in a credit fund where leverage can amplify both gains and losses. Delving into their direct lending portfolio, which is a big part of their business, the weighted average yield on their debt and income, producing investments was 9.99% at cost. That means on average, the investments they've made are expected to generate almost 10% return before considering their current market value. When you look at that same yield, but based on the current market value, it is ever so slightly lower at 9.98%. This tiny difference tells us the portfolio is generally trading close to what it is worth on paper. Now let's look at the shares outstanding. As of the 30th of November 2025, there were a hefty 12,449,139 Class I common shares outstanding, and for Class D common shares there were 4,205 outstanding. The big difference here is expected, as Class I shares often represent the bulk of investments in these types of funds. Scroll offering Class I common shares. Scroll the fund is in the middle of a pretty large offering, aiming to sell up to $5 billion in common shares. They're also doing a separate private offering. This filing provides an update on shares issued in both. For the public offering, they've issued 5159 Class I common shares for about $0.1 million. Scroll Private offering Class I common shares to Scroll in the private offering. They've sold a much larger amount, 1247043 Class I common shares. bringing in a significant $303.8 million. Cumulatively, across both the public and private offerings, they've issued a total of 12,480,207 common shares, generating a total consideration of $304.0 million. Mind you, this doesn't include shares bought through their distribution reinvestment plan. They plan to keep selling shares in both offerings on a monthly basis, so they are actively raising capital. So what does it all mean? The First Eagle Private Credit Fund is clearly active, raising capital through both public and private channels. They've managed to maintain a decent distribution yield for their shareholders, around 10%, which is attractive in today's market. Though we do see that debt to equity ratio is something to monitor. The fact that they continue to sell shares in both offerings suggests investor confidence and a strategy of growth. The unregistered sale of shares to a feeder vehicle is a common practice in the fund world and appears to be handled according to regulatory exemptions. The key will be how they manage their investments in that nearly developed $300 million portfolio, especially considering the leverage. Alright, that is our quick decode of the First Eagle Private Credit Fund's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives into the financial world. And don't forget to check out the Discord link in the description to join our community. Thanks for watching. See you next time.